Hello and welcome to today's discussion on current assets. In this discussion, we will be discussing what current assets are, why they are important, and some examples of current assets. Let's start by defining what current assets are. Current assets are assets that are immediately convertible into cash and are therefore used primarily for short-term financing needs. Examples of current assets include cash, short-term investments, and bank balances. Why are current assets important? Well, for one, they provide quick access to cash, which is essential for most businesses. Current assets also have a relatively high market liquidity, which means that they can be easily transferred or sold without much disruption to the market. Now let's look at some examples of current assets. Cash is one of the most common examples of current assets. It is the most liquid of all current assets and is used primarily for paying bills, purchasing goods and services, and making short-term investments. Another example of a current asset is short-term investments. Short-term investments are investments with a maturity of 1 year or less. Examples of short-term investments include stocks, bonds, and treasury bills. Bank balances are also a type of current asset. Bank balances are the amount of money that a business has in its checking and savings accounts with a bank. These balances are used primarily for short-term financing needs and can be used to pay bills or make purchases. In conclusion, current assets are assets that are immediately convertible into cash and are used primarily for short-term financing needs. They are important because they provide quick access to cash and have a relatively high market liquidity. Examples of current assets include cash, short-term investments, and bank balances.